This video chart presentation, Encore Renaissance Resource Corp, brought to you by baystreet.ca. Encore Renaissance Resources trades on the Toronto Venture Exchange under the ticker EZ. This is looking at about a 3.5-year weekly chart. I scaled it out to there because I wanted to show this big double bottom. This stock has found good support at $0.015. Again, here at the end of 2011, much like it did all the way back in 2008 when the markets were falling apart. Nice rises happened over the last 4 months, coming off of that bottom, about a 300% move. And right now the stock slipped back down to another solid support level. So it's going to stay on radar to try and potentially push back upward again, and perhaps identify this as a true bottom for EZ. You see over about the last year, MACD trending back towards zero. That's a positive divergence as the price per share has been trending down. The MACD has been trending up. And it's kind of at a critical point right now because bullish charts break back through the zero line. That's why it's often referred to as the money line, because good things tend to happen when the trend strengthens and breaks back through zero. That's a weekly chart, so it does move a little bit slower, but both the 12 and 26 EMA are basically sitting right on top of zero at this point. And if some upward pressure comes off of this support level, it should make the break, and it'll further strengthen the idea of some more upward movement. PPO also trending back towards zero, and the ADX is down pretty low, registering about a 14.5. That says there's not a lot of strength to any direction in this play right now, which is pretty much to be expected. Looking at the MFIs, there's just a huge separation from the 7 away from the 14 and 21. I'll put a line on here because when you typically see a big separation, you look for a correction in the 7. And you can see right through here, it generally leads to some upward pressure because the 7 is such a fast-moving component of any indicator. So when I see that big separation, I look for immediate correction. Accumulation distribution, it's a very nice look. Over 2.5 years, buying pressure has still been outweighing selling pressure, and the indicator continually is making higher lows and higher highs. It's a good sign of strength. Shaking money flows based on the accumulation distribution. But what I see from this is for about the last 1.5 years, buying pressure again has been outweighing selling pressure, which reaffirms money coming into the play, which is shown through the accumulation distribution and money flow. CCI just kind of trending right down the middle of the road. That's pretty neutral, registering right around a 0. Full Stow shows momentum. It's actually showing some momentum coming out of this. But again, the stock's been on a slide since peaking up at 4.5 cents. So now what I look for is just to try and reverse course somewhere through here, continually make higher lows, and try and rotate right around that neutral point of 50 and show some bullish momentum coming back into the play. TRIX is a lagging indicator, but it's a pretty strong indicator because it's triple exponentially smoothed. And when you see it trending back towards zero, that's a good indication of some bullishness trying to come into the play. RSIs, of course, they gauge momentum. Dipping back down, they're below 50. That's on the bear chart side of things. But again, that's because the price per share has fallen from these highs. Momentum's come out of the play since that level. And because the stock is pretty thinly traded, the RSIs can whipsaw around pretty quickly. About 52,000 shares is all it's traded this week. Again, this is through Tuesday, so it's only been 2 trading days. So what I'd have my eye on regarding volume is I'd want to see this volume bar try and increase to show that people are seeing it as a buying opportunity coming off this support level at 2.5 cents. Now beyond that, it does move on the half-cent mark for support. There's more at 2 cents, and certainly the bottom support at 1.5. But generally speaking, this stock wants to pull back to 2.5 cents. I wouldn't really want to see it close down at 2. I'd want to see that 2.5 cent mark as a better sign of bullishness. Now on the flip side, the resistance, it comes in relatively similar. A little bit there at 3, a little bit there at 3.5. The key point I'd be looking for is trying to close above 4 cents. The PPS has moved up, challenged 4.5 cents on numerous occasions. But I'm looking for it to try and close above 4 because that'll be the first time since May of last year that happened. And that will be a good indication of potentially making an overall reversal off this bottom and starting a new uptrend. Importantly as well, the 50-day moving average is there. That's going to serve as a little bit of dynamic resistance. But I want to see the stock closing above that to start making this 50-day rotate and start curling upward towards a potential golden cross of the 200-day moving average. Now clearly that's down the road. Technical analysis a lot of times is about baby stepping your way through the chart. And that means watching a solid support level hold, seeing if volume can pick up as the price per share tries to take out a resistance level. Beyond that 4-cent resistance, the next stage is start jumping up a penny at a time. A little bit more there at a nickel. I'd say that's going to be somewhat substantial because that was a support level way back here in 2009. And then it's going to come back in again at 6 cents. But some key points are going to start rolling in up there near 8. Try and take out some old highs. 200-day moving average is there. In the overall perspective of a chart, I want to see the price per share trending over top of the 200-day as well. Now, it's a huge move from where it is, and obviously I don't look for those sort of things tomorrow. What I focus on is seeing the trend continue to strengthen, see this MACD break back through zero, Show these RSIs start to move back above 50, show that there's some good momentum in the play, and I watch for these resistance levels to fall. All in all, though, a pretty nice looking chart with a huge double bottom, and something I think worth keeping an eye on in the future to see where this leads. As always, this is merely my interpretation of the EZ chart. I'm not a financial consultant and strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the baystreet.ca website to view the full disclaimer disclosure. I do not base any investment decisions upon any material found on the website and/or its video chart. No person employed by baystreet.ca is a registered investment advisor or licensed broker-dealer. Thank you for watching and trade smart.